So, first of all, welcome to this gorgeous place, and thank you, Tim and Ole, for inviting me. It's a great honor, and it's a great pleasure to meeting all of you. Without having talked before, we both speak about the blue economy, but let me tell you, it's something that is just an example for the massive transformation that is currently going on in our dear capital markets. And what Marisa said of how the bank that you're luckily working for is so committed to really introduce and implement any kind of nature risk in your balance sheet is way ahead of the market. Let me tell you something about myself. As Tim said, I've been working more than 20 years, 25 years in the financial markets with classical asset owners. So all of my life, I'm a mathematician, so I really like numbers. I have been working with pension funds, insurance companies, big families, so really large-scale asset owners. And about 15 years ago, I was working with Dutch pension funds. And that's interesting. That's actually the largest pension fund market is in Europe. Nobody really knows about that, but they are 4 times bigger than the German pension fund market. And for some reason, and there is good reasons, these Dutch pension funds have been implementing sustainability into their investment strategy long way before any kind of regulation. Why? Because they consider that as their fiduciary duty. They say, we are long-term investors, and we are responsible, of course, for the return that we achieve, because we have to pay out pensions in the next 20, 30, 40 years. However, we are also responsible for what the money is doing. And I would like to take you on a journey, a very short journey today in my world, in the big world of global asset owners, and what is currently changing. And what I want to send to you is a very positive signal. Because if we look at the markets and what Tim said, do we have the courage? Do we have the guts? Do we have the imagination to really deploy this massive amount of capital into the right way, into a more sustainable economy? Do we have the courage? Well, some investors really need that courage, and they can really use that courage. Most of the big scale investors that I'm working with, the pension funds of the world, they need other decisions that have to be taken. And these decisions, I want to show you what I mean in a more system thinking way. So if we all believe that we need to change the system, we will not change the system by telling the system, oh, you have to do some more reporting. Right? I mean, some more reporting, I'm obviously, European, German, so we know all about compliance rules and everything. That will not change the system. So you have to somehow find in this system this little switch, which will then completely change the whole system. And I can tell you one thing, that switch has been found. Why? It's been found by the one and only institution that is essential for the whole capital market, i.e. also for the economy, and that's the central banks. And here I brought to you a very new article that was published 2 days ago by 3 people from the European Central Bank, the Climate Change Center, which was established by Christine Lagarde. And these 3 people have published a little article about the blue economy and why it is the world and the economy, and that's the first line, needs healthy oceans. Those are all quotes. So in the whole article, you find sentences like, oceans are relevant to price stability. They affect key economic activities. any kind of non-activity will increase the danger of price volatility for food and traded goods. And you know all what this is talking about, and it's like preaching to the choir, but I want to tell you that outside of our wonderful little impact bubble, the rest of the world is now looking at real economical risk. And this little article means the world. Because if the central bank publishes this kind of article openly, it means it is changing something. And that is something I really want to show you how this system is now going to change. And one thing that is also the quote from this article, protecting our ocean is not just an environmental goal or something vogue. It is an economic necessity. And that was said by the European Central Bank, and one of the authors is a good friend of mine, and I always ask her, is that just the European Central Bank? And it's not. It's the global central banks. Unfortunately, currently without the Fed. So, why is the system changing? Going one step back to tell you something about my world of asset owners. How do these asset owners make decisions? It's unfortunately not just imagination and courage. It's just the 3R I'm always talking about. It's risk, it's regulation, and return. And for all the asset owners I put down here on the slide, the pension funds, the insurance company, the sovereign funds, the foundations, the public funds, and the corporates, that's the case. The only ones who are more free, who have the liberty to do whatever they like, is actually the families, because they have no target return. They have no regulation, really. But for all of the others, and that's the big trillion number, is regulation key, because they never do whatever they like. They have to fulfill certain fiduciary duties. And the fiduciary duty I put here, the return, and that's maybe some surprising news for you, the return expectation of an average pension fund is 4.5% per annum. That's all they need. They are not intending of double digit and I don't know how many multiples. They cannot work with that. They really need, and what they need is stability, a very stable return. And the other thing that's very much driving every single decision is the risk. And here comes the central bank. Because every person who works in a pension fund, and you imagine these people, I know a lot of them, they manage 600 billion euro and they're just normal people. They are employed by that. They're not entrepreneurs, they're employed by the pension fund. And what they're maximum afraid of is too much risk. Because the risk is always monitored by their own authority. So the risk of the overall portfolio of every single asset and the maximum DD is maximum drawdown. That is something that they are really afraid of. The regulation is regulating not over any kind of reporting. They really regulate the asset allocation. One thing, that's why pension funds cannot invest a huge stake in venture capital. Why? Because venture capital is risky and therefore it's only allowed in a very small portion. They regulate the governance, they regulate, again, the risk framework. So they tell exactly every pension fund what to do and what not to do. And at the end of the day, the return has to be stable. It shouldn't be very volatile, and they are not too keen on really high J curves because they just need this stability. And that's why one of the products that Marisa introduced, or the whole asset field of fixed income, is so immensely important for all asset owners. Fixed income is the place to be. And for me, fixed income is also the asset world where impact has to happen. because this is where I can do everything that I want for long term, in a long-term perspective, and still deliver a stable return. And that's exactly what all of these asset owners are looking for. A paradigm shift is currently going on, a complete system change. And here I put down, just for your knowledge, like the value chain of capital decision making in this huge capital market. As I said, the first and foremost little switch that actually can change the whole system, the whole engine, is the central banks, because they say, we define the critical elements, we define the systemic risks of the economy and the capital market, and they set the scene. What they say is then taken to the regulators, to the BaFins, to the FINMAs of this world. So they then create regulation. And what Marisa said, and I'm really impressed by that, this regulation is now being implemented by the end of last year. So this is really news, and I'm really happy about this, because the regulators, the head of the BaFin, the German regulators, just said last year, it was September, he said, physical risks must be implemented in any kind of banking decision making. What does that mean? And that's on the right side of the slide. So if these kind of physical, nature-related risks, floodings, value chains, and now we see, and we've just had it, it's not only about where your company is located and if you have to be afraid of a flooding or a storm, it's also your value chain. Where do you get your materials from? Are they shipped on the River Rhine? Or are they shipped through the Strait of Hormuz? And that's exactly that. That's physical risk, and that could be, in this case, it's a war, but it could be also the River Rhine, which was falling dry 2 years ago. And if you're a company, a little company, you probably know is BASF. That's the largest chemical firm in Germany. And they are located in the middle of Germany, and the only big transport way is the River Rhine in front of them. And that if that's falling dry due to climate change, they really have a severe problem. And that's exactly this system change which is currently happening. And I wrote there, due to this regulatory decision that these kind of non-financial but nature risks have to be included in your risk framework, that means the sustainability and impact topic moves from a rather unpleasant reporting and compliance issue to the heart and the core of each capital market participant, which is risk management. It's moving away. It's not, I don't want to do this. It's at the risk manager, and the risk manager are the most powerful people in every insurance company and every bank. Sorry. That means once the insurance companies say, we now have to look at not only volatility, we not only have to look at interest rate, we not only have to look at inflation rates, we also look at nature. That means they want to know from each and every company they lend money to, for each and every company they give an insurance to, and all of a sudden this whole idea of why do I have to know how much water I use, again, moves from a not so interesting compliant issue to a substantial risk of your own entrepreneurial doing. Because if you don't know how to act, if you don't know how to mitigate it, you won't get an insurance. You won't get a loan. And that is really changing something. And last but not least, it's also, of course, changing us, the investment industry. All of a sudden, the value of companies is going to change due to their own risk portfolio, due to the risk of their own doing, of their business. now we see the most easiest thing with the Strait of Hormuz and the energy transition, but it's the same thing with natural disasters, natural risk. So coming to an end. Okay. Because I thought it, okay. The interesting thing is, once this decision is now dribbling down from the central banks to the regulators to the economy and of course to the investment industry, the next question comes up. So I have to identify my risk, I have to measure my risk, which is the most and important first step in changing a system, because I cannot manage what I cannot measure, full stop. So I have to find out as a company, as an entrepreneur, what is my risk, because I have to deliver it to my bank or my insurance company. On the other side, the investment industry is smart. And they say, oh, wait a minute, there is a whole set of new risks. We need to mitigate them. We need to find ways, we need to invent or invest in investment opportunities that stabilizes or mitigates my risk of energy supply, that mitigates my risk of being dependent on international deliveries of whatever material. Maybe I look here in Europe and create new materials here and have a more sustainable of recycling, of the idea of circularity, of using the materials that we have here is essential. And you see in this slide, not a single word which is like sustainability or impact. It's purely economical common sense. This is what we have to think about. It's an economical common sense that we have to invest in future-oriented industries and future-oriented technologies. And Marisa just said Standard Chartered is a bank that is very much focused on developing markets. So she's working a lot in Asia. And the Asian markets are simply leapfrogging us. They don't waste time on reporting issues. They don't waste time of, oh, should we replace our big SUV with an electrical vehicle? They just don't even ask the question. They just jump into a new world. And they surpass us right now, which we all know in China. And what I always say in my pension fund world, the key message I always tell to the impact world I'm also love is use the right language. Don't talk to pension funds or large-scale investors about, the massive money that we need to save the oceans. Because the pension fund people that I know would say, that's not my job. It's not my job to save the ocean. My job is to pay out pensions for the next 30 years. Sorry. And there is no way of getting them into their personal and human being, blah, blah, blah. Forget it. They really are thinking and speaking their own language. And that's why I deliberately, if I just take the example of the blue economy, which Marisa said, it's huge, it's half of the economy in the world. This is what I talk about when I talk about the blue economy with large-scale investors, because as you can see, it's energy. And the EU, I'm working a lot with the European Commission. The Commission also changed their language from green and impact and sustainability to energy resilience, energy stability, and energy transformation. And that's it. And the marine infrastructure is a key part to that. Same thing with marine mobility. Don't try to talk to an investor about ships and fishing and, it's a whole universe away from them. They have never, haven't even thought about investing in some kind of vessels, because that's something they never do. at least those that I was working with. But what they know and what they think about is trade and trade security and trade stability and trade transformation. And there we not talk about ships, we talk about marine mobility. And all of a sudden they get it, that you can talk about it. Same thing with food and industry. So materials, Marisa was talking about algae. That's something, there's a steep learning curves for all of these asset owners about nature products, because they've never thought about it. You know, they are in capital markets, there's equities and bonds, but they never thought about algae. So that's one thing that we all have to do, is train them and educate them what this is all about, how food is important, and food importance and food stability is not only something that is done by some philanthropic foundation that should care of that. No, it means social stability, and it also includes, and in this case, of course, marine resources. We depend on them. And you can, for example, I've written a big report on the blue economy, and one great investment opportunity is if you combine infrastructure with food. And that is something that is called multi-use infrastructure, where you have an offshore wind park. And the good thing about offshore wind parks, you can discuss about, you know, setting it up, but once it's there is no fishing, right? So it's like a protected area. And if you plant algae in that farm, which is done big scale in China and also big scale in front of Denmark, you not only have a second cash flow with the production of these algae, and some of these brown algae, they grow 50 centimeters in a week. So you can really harvest them all the time. But the best thing is, once you create or plant these algae, you create a new ecosystem, because it gives food and shelter for fish. So you have double income, double cash flow, plus energy, plus a very interesting material, plus a massive impact. So you see, it's all about language, it's all about system change, and I just want to give you a hands up. This is the right time to do this. Always look at the fixed income side of things sometimes, because it's just a bigger market. And it allows very, very interesting structures with the outcome bonds and the debt for nature swaps. That's on a national basis, but others, like the DN group, is just such an interesting structure for a much wider variety of investors. That's it for me. Do you have any questions? No.
We're going to come back to the questions now. Thank you very much, Antje.